So first, before we talk about GASB 87, I just wanted to put a note out here that there are numerous statements today that are governing the current lease accounting requirements for you. We're not going to go through all these today, but as a few examples, GASB statement number 62, we've got GASB statement number 13, and NCGA statement number 5, which are all governing the current lease accounting requirements. Basically, what you probably know and what you've probably been doing with these standards is your operating leases have been treated as an expense if you're the lessee, or income if you are the lessor, and they've been off your balance sheet or your statement of net position. But of course, with GASB 87, this is all changing. So for GASB 87, this really came about to provide more transparency when it comes to your lease obligations. So this impacts both the lessee and the lessor. And the approach that we have on here, the single model approach, what this is referring to is that all in-scope leases, as both the lessee and the lessor, are going to be finance leases. So that means that you need to recognize those as a lessee with an asset and a liability, the lease liability specifically. And as the lessor, you'll have a lease receivable as well as a deferred inflow of resources. Now, we have on here that it's similar to the IASB, the standard IFRS 16. This is similar because IFRS 16 does have a similar scope when it comes to leases. All leases are finance leases. But if you are familiar with ASC 842, the FASB standard, it's different because that standard has a distinction between operating and finance leases. Now, as for the transition method, the board has actually recognized that it's not always going to be practical to make it required for you all to go back to the start date of every single lease and transition effectively using like a full retrospective approach. So instead, the board has actually stated that GASB 87 adjustments should be made as of the beginning of the first period that you present in your financials, which is why this approach resembles a modified retrospective approach. Now, in regards to comparative periods, it should be applied retroactively if practicable by restating your previous financials for all those that you present. Now, if it's not deemed to be practicable, you would just apply the cumulative effect as a restatement of your beginning net position for the earliest period you restate. So if you choose not to, if you don't restate, you should disclose any reasons for not restating it. And also, if you do, actually issue that comparative period, you should disclose the nature of the restatement. Finally, GASB 87 was originally effective for reporting periods that began after December 15th of 2019. However, due to the impacts of the COVID-19 pandemic, the GASB actually provided a delay, and it's now effective for reporting periods after June 15th of 2021. So for those of you who all have a 6/30 year end, it would essentially be effective on July 1st of this year. So per GASB 87, a lease is defined as a contract that conveys control, we'll start with that first, of the right to use another entity's non-financial asset as specified in the contract for a period of time in an exchange or exchange-like transaction. So starting off with that first portion of the definition, control, we really need to decide, well, what actually conveys control? Well, lucky for us, this is actually defined within GASB 87 itself if you move on to the next paragraph, which is paragraph 5. And so paragraph 5 defines the control as having the right to obtain the present service capacity from using the underlying asset. So really understanding whether or not you obtain the economic benefit from using the asset. So something that would not be having the present service capacity would be if you have service concession arrangements, because essentially you're getting paid to operate the asset. You're not obtaining the present service capacity, so that would be out of scope. And then next, having the right to determine the nature and the manner of the use of the underlying asset would be the second portion of control. And so really here thinking about whether or not you have the ability to decide how, when, and for what purpose the asset is actually being used. So another example of something out of scope or that would not have control would be a supply contract, because you're just receiving the output, supplies, but not really having the ability to operate what's producing the output. So both of these two criteria are required in order for you to have control. It's worth noting here as well, we're talking about having the right to use, the control of the right to use here, which is an intangible asset. We're not talking about the actual asset itself. Just a note here before we get into the non-financial assets section. Now, when we think about the next portion here, the non-financial asset, kind of talking about what Kylie was mentioning about if you do have like software as a service, it's not going to be included because what we're typically thinking about for non-financial assets are fixed physical assets, such as land, buildings, vehicles, equipment, etc. So again, if you do have software as a service, that's going to be covered in a different standard, GASB 96, which is coming out soon as well. Next portion of the definition is a period of time. It's the period of time must be explicitly stated because that really is what makes this a lease rather than some sort of like a purchase or a financing arrangement. This is actually unique to GASB 87 as compared to other standards when we talk about time frame, because the time frame does not need to be an uninterrupted period. The implementation guide itself actually uses an example in which the entity may be using the asset for a few days out of the week. So maybe just renting it on the weekends. So even though you're not using it for the entire week, it's still a stated time frame. So it would still be a period of time and therefore a lease. And finally, the last portion of this definition is the exchange or exchange-like transaction piece. You'll notice it says exchange-like transaction because it doesn't have to be a perfectly exact match here. Relatively equal values can be exchanged, though not exactly equal. So examples of non-exchange transactions are going to be donations or grants. Another example, you guys might have some of these types of arrangements would be if you are lending property for like $1 a month. That's definitely not going to be a similar value exchange or exchange-like transaction. So therefore, it's going to be out of scope. All right. So now that we have really dug into that definition here, a much more detailed definition, we're going to go ahead and talk about some scoping here in our next section. So if you have these types of arrangements, we're going to go through these here. These are scoped out for GASB 87. So the first of which being intangibles. So intangible assets, thinking about like the right to explore natural resources, licensing contracts. Typically, these are the ability to do something that is intangible. So those are out of scope. Biological assets are out of scope. So if you've got like timber, living animals or plants, and then of course inventory as well. Service concession arrangements, we talked about that a little bit earlier. Those are out of scope for that reason. Same with supply contracts, such as like power purchase arrangements, those are out. And then title transfers, we're going to touch on this in a subsequent slide, but if you have an automatic title transfer within the lease, it's going to be scoped out. Same for any short-term lease you have as well. So let's talk about the title transfer here. Now, you might be familiar with this because if you do have existing capital leases, you might know that one of the tests to determine whether you have a capital or an operating lease is whether title transfers from the lessor to the lessee automatically. And so this is, again, unique to GASB 87 because if that is the case, then what you have is considered a financing arrangement and rather than a lease here. And when you think about it, it makes sense, right? Because essentially you're just making payments over a defined period of time to eventually obtain the asset, which is just like purchasing the asset. Now, something to note here is that it can be confusing because bargain purchase options do not receive the same treatment, or if you have a purchase option that you are reasonably certain to exercise. And this is something we get a lot of questions on here at Lease Queries because it can be a little bit confusing because you think about it that it would be an assumed purchase, just like a title transfer. However, this is actually discussed at length by the board itself because due to the cumbersome and often antiquated procurement requirements that you might have as a governmental entity, you might be reasonably certain to purchase something based on price or even have a bargain purchase option to purchase something for like $1. But it wouldn't necessarily be enough to go through the work of purchasing all the roadblocks, adding an approved vendor, all the things that you might need to do. There might be enough there to prevent being able to purchase it at all. So because of that, these are still in scope under GASB 87, and they're not treated the same as those that have an automatic title transfer within the lease. Next, short-term leases. So again, we're talking about things that are out of scope here. We're talking about short-term leases. So a short-term lease is going to be a lease that has less than 12 months on it. Now, this is, again, unique here for GASB 87 because when you determine whether you have a short-term lease, you have to take into account the maximum possible lease term. So that would include any sort of renewal options that you have on the lease, regardless of your certainty to renew them. So even if they exist and you don't know whether you're going to renew them or not, if it brings the lease out beyond 12 months, it's not going to be able to be a short-term lease. Really, the board wanted to take the judgment out of this determination. So if they exist, it's not going to be a short-term lease. If you do have short-term leases and they are less than 12 months, it is accounted for using the lease contract method, and there are no disclosure requirements necessary.